Onto Innovation is the next big AI winner. In this video, I'm going to take you through what Onto does, and I'm going to take you through my high five snapshot and whether you should be a buyer of this company or not. Let's get into it. So, Onto Health, they work with high bandwidth memory, 2.5D packaging, gate all around, power semis, working with NVIDIA, AMD. They have partnerships with TSMC and Samsung, massive partnerships there. We go through here, we can see that a bunch of mumbo jumbo, a bunch of high tech stuff. We can get down here from their last earnings call. They are going to be powered and they are going to see a lot of tailwinds from electric vehicles, from smartwatches, from anything basically with a semiconductor. They are in those semiconductors and they are competing to give the products and to give the tools basically to make these semiconductors run more smoothly with TSMC, Samsung, whether it's memory, whether it's data center, whether it's electric vehicles, whether it's AI, ChatGPT, whatever it may be. They are going to be a big player in this sector. Like I said, they're a smaller company. If we look over here into our visual stocks, we can see some fundamentals here. This company is growing revenue consistently. They've had a dip in 2023, but now they're rebounding. And if we look on estimates, they're expected to continue to rebound, going from 2024, almost $1 billion in revenue, climbing to almost $1 billion this year, and then climbing all the way up to $1.2 billion in 2027. See, this EPS is supposed to continue to grow as well. If we go back over here, I love to see when a company has increasing revenues, increasing net incomes as they have for 2024, and going to continue to increase those net incomes through 2025 to 2027. But also massive free cash flow growth. You see back in 2015, small free cash flow growth. Then they got it together. Since 2020, they've been on the up and up, not in a straight line, but they've been on the up and up with their free cash flow. Large $1 billion in cash and cash equivalents versus debt of 10 million. And then they have operating expenses, R&D. Like I said, estimates are going to continue to climb here. If we look over here at my high five snapshot, I have a fair intrinsic, or I have an intrinsic value of $176 for Onto. $176 is 49% margin of safety from $90, around $90 per share whenever you're watching this video. A $4.4 billion market cap. They're a buy on price to sales ratio of 4.88. They're a buy free cash flow yield of almost 6%. Only a 17 PE, 17.54 PE, PEG ratio 0.84. And again, $176 intrinsic value, 49% margin of safety, almost a double from around $90 per share. And if we look at it on an EPS basis, they're expected to do $6.30 of EPS this year in 2025. And that puts us at about $189 per share, which is a 52% margin of safety. So right around 50% margin of safety. This company is deeply undervalued. They're getting back on track with their revenue. Their free cash flows continue to climb higher. Their EPS and their net income is continuing to climb higher. And I think it's a buy all day. I would be buying this company dollar cost averaging myself, and I am doing this anything under $105 per share, giving me a 40% margin of safety. Anything below $105 per share, I'm going to continue to buy this company. Another little tidbit, Onto Innovations is a high margin, cash rich semiconductor tool maker, poised to benefit from AI, electric vehicles, advanced packaging trends, undervalued from strong growth, elite clients, deep IP moat, increasing net income, increasing revenue, and increasing free cash flow, guys. We look at it on a chart. If we pull my charts up here on TradingView, while we're waiting for TradingView to get loaded up, drop me a like, drop me a subscribe. I really appreciate it, guys. If you're still here watching these videos, if you like these shorter type videos, definitely let me know in the comments below. Let me know if you are a buyer of Onto Innovation or if you are passing on this company. We can clearly see on the monthly chart dating back to 2020, we formed this nice long trend line that we are currently sitting on right now since 2020. If this breaks, of course, we can go lower, but it's held once, twice, thrice, and now four times, four separate times this trend line is held. And if we do bounce here, like we have so many other times, you see that we can have a massive run higher. We're also on the floor here on the Williams percentage range. As soon as we break out of this box, maybe even get across to this 21 EMA, then we would be on the up and up, and we could see a massive, massive move onto innovation, along with the fundamentals being undervalued, as we already know, and then continue to climb higher. That is onto innovation. I'm bullish on this company for the long term. I think the stock price is severely depressed right now. The fundamentals are there. Net income, revenue, EPS, all growing, all there. They're attacking AI. They're a big part of the AI movement. And I think they will continue to do this and disrupt and basically take market share away from some other larger competitors as they are smaller, more focused, and getting after it. That's onto innovations. If you like this, drop a like, drop a subscribe, and I'll catch you guys in the next one. Have a great day.